The following video is for entertainment use only and should not be considered financial advice. Please do your own research. Hello YouTube and welcome to my October portfolio update for my dividend reinvestment strategy. Taking a look at the top 10 companies in my chart. Not too much change there. BP still number 1, Shell still number 2, but below that a little bit changes around. Arch and Daniels up, Cardinal Health's down, Automatic Process and Data's down. So not too much of a change there really. How was October? Bit of an up and down month. Also we had the UK government merry-go-round, which caused quite a bit of turmoil in the market, but once they looks like they resolved something, it's picked up quite nicely. So I've finished the month on 66221. When I started the month at 590, so about 300 quid nearly. So yeah, happy with that. Yeah, so this month seen a lot of change in terms of had a sea of red. Now I've got a sea of green again, but I'm still down on some big ones. 3M being having a hard time at the moment. I might be dropping that because they might cut their dividend. So keep an eye on that very closely. I might drop that company if they do. Apart from that, everything's looking alright. AT&T makes a bit of recovery, which is good. Yeah, not looking too bad overall for the month. So what I've been doing this month is sort of getting ready for change of tact in terms of what I'm doing for next year. So I've been sorting all these companies out into reorganising the pies that are in and how I'm going to do it to go to getting prepared for next year's sort of change. So I'm still going to be doing dividend reinvestment. It's still going to be cost average as well, but I just want to get how I want to go for my dividend reinvestment type of thing. So I've been spending a lot of time. Did a couple of hours yesterday on it. Got one pie sorted out. Got a bit more to go yet, but I think it's going to prove off nicely, which is good. As you can see, a few more greens this month than I was last month. Shows a good sign of recovery. Oh, it's a good sign of market. I'm going to stop using the words recovery and crash because it's not really. It's just the way the market's going. It's very volatile at the moment. So yeah, they're looking okay. Meta platforms, that's down quite a bit. They've had spent like 1.5 billion, I think they've said they've done on the metaverse, and it's not quite working out. So that's taking quite a hit at the moment. But I think it will come long term coming. Anything else I can think of what happened this month? As I'm scrolling through. 3M, done 3M, metaverse, they're having a bad time. Yeah, apart from that, pretty standard after that. Doing okay. So as you can see, a few more greens on the board, still a few reds, but overall not too shabby. Apart from UK gilt, and that's all the turmoil. This mini budget stuff really has affected that pie, or that holding. So we'll see how it goes with that. It's not my favourite one anyway, so doing okay. So there's the quick overview of my pie, or of my portfolio. I keep saying pie today. Spent a lot of time doing it. There's my top 10, so it's looking okay. Happy with that. Just go over and have a look at what dividends I got this month. So my first monthly payer, AGNC, up quite a bit. That's really good to see. 79 pence. Hoping I'll get to £1 before Christmas or by Christmas. That'd be really good. Automatic data processing paid out as well at 38 pence. Cardinal Health paid out as well at 69 pence. That's good. Chubb paid out at 42 pence. Coca-Cola paid out 23 pence. It's nice to see. Got my first dividends from Diageo at 20 pence. So, yay, it's off the mark. Ecolab's paid out. As you can see, that's a nice little growth for the year. 19 pence. Quite happy with that. Franklin Resources paid out 75 pence. It's getting bigger, which is good. Gladstone Land, again, monthly payer, but it's not growing as I thought it would, but it's consistently low. But we'll see. I think it's going to go in the right direction for what I want. GlaxoSmithKline had quite a good time with it lately, and their dividend payout reflects that. Horizon Finance, that's one I did this year. Smashing it out. Love it. Doing really well. Quite like that one. I've got UK one, very similar. I'm thinking about adding, but it's a bit risky, so I'll make a decision for the end of the year and let you guys know. Illinois Toolworks, it's another good one. 46 pence that paid out. My iShares ETF BlackRock one paid out 60 pence. Not sure why it didn't pay out there. I'll have to go back and check that actually. But I'm going to be selling that one because I've got two ETFs in the FTSE 100. I don't know how quite managed how I'll do that, but I did. But after reviewing the Vanguard one versus this one, I've decided I'm going to sell this one. When it's but I need to pay a bit more profit yet. But I will be selling that one. My iShares JP Morgan's bonds doing okay. 41 pence for this month. It's quite nice. Kimberly Clark's paid out this month at 65 pence. So that's doing okay. LTC Properties. This is another one of my monthly payers. One of my REITs, 38 pence, which is good. Steady, it's nice. I kind of like to compare that one to Reality Real Company. They're two very similar companies, and dividend-wise, this one outperforms Reality Income, but Reality Income does it on share price. Main Street Capital, down a little bit from last month. Not sure why. Take a look, really. Mechatronics seen a bit of recovery because at one point I was consider selling that, but it's made a bit of recovery, so I'm okay with that now. 41 pence, so reasonably happy with that. Pepsi, 54 pence. Very good, very happy. Another one of my ETF type things pays out monthly, so we've got the short-term high yield corporate bond index paid out 29 pence, and then we've got the US one which paid out 35 pence. In terms of share price, that one isn't doing so great, and that one is, but they do pay out better than the Vanguard one, so I'm going to keep them. Prospect Capital, another one of my good monthly payer ones, 72 pence, very happy with that. Again, I'd like to see that one get to £1 by Christmas. Reality Income, another REIT monthly payer. Again, there, look nice to see that going up by a penny minimum a month, sometimes two. So that's getting close to being stable at going up 2 pence a month now. Roper Technologies, this is one of my dividend growth companies, so it's showing good capital growth in the share price, and the dividend is also growing as well. So this is like a long-term holding. I think it's going to do really well in the future. But getting in now. Sean Communications just plods along nicely. It's okay. Nothing to get excited about. Stag doing okay. Another monthly dividend payer. Share price took a bit of a hammering this year, but still doing okay. T Rowe Price, that paid out this month. Well, I was expecting it last month though, but it paid out this month. That's only because the way Train 2 and 2 pay dividends, the actual ex-dividend date was in September. I just didn't get the money till October. So I paid out 56 pence, happy with that. My TRIG, the Renewable Infrastructure Group, paid out at 30 pence, very happy with that. Some of the Vanguard FTSE 100 paid out at 39 pence. My Vanguard All World High Dividend Yield, which is sort of what I'm trying to do as individual companies. This is an ETF that does it. That paid out 77 pence. That's down on the last month, but not a problem. Emerging markets paid out. These are all ETFs now. The next few paid out 45 pence. That's okay. I wasn't expecting that to pay out anything because China's in a bit of a mess with lockdowns and with global recessions and supply chain issues and all the other nice things that are affecting the cost of living at the moment. I wasn't expecting that, but it's doing okay. My gilt paid me out 10 pence this month for the UK government bonds. The US corporate bonds though did a better, 18 pence, doing okay. Another one of my REITs here, but it's a quarterly paying REIT, VICI Properties, paid out 42 pence, which is really good. And that's that one. I think that's it. And Whitestone, one of my monthly ones, at 12 pence. So overall, not a bad month. The total for the month was £13.21, which is a nice surprise, as I was expecting it to be around the £10 mark for some reason. I didn't have high hopes for this month being any more than really £10. So really happy that came out. Well, that's a really nice surprise. Going over to looking at my zoom out a little bit so you can see it better. How they perform on the charts. So my first chart shows each company paying out. I'll sort of chart it up. So looking at this, BP is number 1 now by a long way, followed by Penning Group is number 2. Number 3 is Shell. Number 4 is Aviva, but that adds some return of capital, so it's a bit skew if that. And sort of the tie for 5th place is AGNC and Prospect Capital. But all the other ones now, all the dividend paying companies that I've got are all now off the mark, thank God. Going on to how my visual of how the months have gone by. So January, February, around the £5 mark. Nice little jump in March. And then I've hit the £10 mark ever since. Bang. Bang, 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 bang. So 2 more months to go. 2 more months to keep above the £10 mark. And we are hitting the targets. So then over to the numbers for this month. So I put in £337.55 this month into the investment portfolio. So yeah, give me total investment this year of nearly 2.8, which is okay. That's on target for the 250 a month. Because I think on there's £3,000, yeah. So I should beat the 250 a month. Not that I'm sure I'm going to maintain that going forward. Cost of living is quite high, interest rates quite high, and I have an offset mortgage. So at the moment, cash is performing better in my offset mortgage than it is going near at the moment. So I'm kind of putting a little bit less in here and a little bit more in there. So like I said, the portfolio balance at the moment is 62221, which is okay. So it's given me return on investment before dividend reinvestment this year of 9.72%. So I'm quite happy with that because I want to maintain 10% or around 10% for the year. So hopefully that will stay that way because I think that's a good return on investment. With dividend investment, still over 9%. Overall, I'm running that since I started this portfolio. I'm running that 16%, which is good. And my dividend return on investment for dividend this year, so that's all the dividends I've ever had, all the shares plus the dividend I'm getting this year, is running at 4.5%, which is good. It's not really something you should measure it on, but I'd just like to know that. What I do measure it on though is my dividend yield for the year, or sorry, the dividend yield total, not for the year, is running at 3.28, which I think is just slightly up from the month before. And I had a target in my head. I'm going to say 3.5% for the year, so I think I'm going to be on course to get that, all very close. So it's working out okay. The total dividends since I've started this portfolio is £175. That's okay. My average dividend per month is £10 now, so that's good because I'd set my own target because I thought I could achieve that of £10 a month, and I'm already achieving it. So I've had a good year for dividends, really. Capital growth is £260, so I've made on the money deposit this year. So I've made on the £2,264 I've put in this year. Sorry, I've made £260 on it. Capital growth. Unrealised gains, that is, because I've not sold anything. So overall, quite happy. And overall, since I started it, I'm up nearly 900 quid. So we're at 6222 and £13. So let's compare that to the ISA. So I've updated the rates because I did a bit of Google search because the interest rates have gone up again. So the ISA is now paying 2.85%. So that would give me £12 of interest, and I've got £13 odd in dividends. So I'm still beating the interest rate, but marginally now. So it's very close now. And my end balance, I'm still about £1,000 up though. So with the interest rates rising, this is why I'm not really putting so much in there. I'm more using against my offset in my mortgage. It's just now what I'm getting through investing is now becoming comparable to what a savings account is getting me, would get me, or does get me, should I say? That's a better way of saying it. So I need some good dividend returns to beat this interest rate now. But it's not too bad. So let's have a look how my compounding's looking. So the blue being year 21, where I was just getting this sort of portfolio up and running and getting sorted out what companies I want. Orange is 2022, where I then sort of trying to build on what I want to do and seeing where I'm going. So as you can see, compound effects on a good upward trajectory. That's what this chart shows. I more than doubled what I got last year. Onto my model. So can I do 50k in 5 years? Year 5, still no. I'm not even going to get halfway by looks at this at the moment. But again, this is just trying to predict the future. It's not going to be accurate yet. The closer I get to it, the more accurate it should become. But a milestone is using the predictor, and this is why it's only a predictor. It predicted that I'd get £105 worth of dividends this year, and I've already beaten that. I'm already sitting at 123, so shows how accurate this model is. It also gave me a capital growth prediction of £651, and I'm absolutely miles away from that. And a fund value of nearly 10, and I'm at 6. So far, all this is really proven is nothing. It's not very accurate. So it's a bit of a shame, but hopefully we can do a bit more work on it and try and get it a bit more accurate. But yeah, I'm hoping to have the fund value, if the market still moves in an upwards direction over the next 2 months, I'm hoping to have a fund value of £7,000 by the end of the year. That's what I'd like to see. But using this, where does it mean I'll get it to above the 50k mark? Year 13. So I think it's been sitting about 14 for most of the year, and now it's sitting at 13. So it's coming closer. What does it look like for me to get to £12,000 dividends a year to give me £1,000 a month? 51 years. That'll change with what I'm going to try and do for next year. Anyway, guys, that's that. If you've enjoyed this video, and if I'm hoping that you have, then please give it a like and subscribe. Also, if you are thinking about Trading 212 as your investment platform, they're currently doing a reward scheme to get free shares. I'll copy that, copy the clipboard. I'll put the link for this in the description below, and you should be able to get a free share. Thanks for watching, guys. See you next time.